Good morning, traders and investors. It is Monday, May 5th. Hopefully everyone had a good weekend. Taking a look at the charts, we do have equities set to open lower this morning. NASDAQ down 1%, SP 500 down 0.8, and the other indices down in between there. A little bit of a profit taking, a little bit of a pullback. If we take a look at our short-term momentum chart, there was some FOMO on Friday. More or less money was kind of piling in, moving into the market, and is driving it up. Typically, when we see some FOMO, we're going to see a little bit of a pause and pullback. That is normal within an uptrend. In an uptrend, you'll notice we tend to see overbought territories happen quite often. We'll tag these levels and the price will keep going higher. In a downtrend, in an uptrend, let me confirm here. In an uptrend, the important parts are these oversold levels. So in an uptrend, you expect the market to keep pushing into the FOMO repeatedly. It will have small pauses and pullbacks, but it'll naturally still want to go up. In a rising trend, it's the panic selling that creates that like kind of opportunity where people freak out, they panic, they dump out, and then of course it gets bought back up. So these are kind of the more critical parts of the market. If I was to just go back in time to the downtrend here, hold on a sec, just mangled something. How do I undo that? Hold on. Okay, if we just go back to a downtrending time, let me just zoom out a little bit here. You'll notice in a downtrend, there's very few FOMO indicators, meaning when we hit these waves of FOMO, that's usually when the market is putting in these short-term tops. We have, it's hard to see here, but a bunch of FOMO because it's dwarfed with this huge spike in price. But we'll have very rare FOMO to the downside, and every time there's FOMO, it's usually the market pausing and pulling back. In a downtrend, we see a majority of the time we see panic selling, and it's the flip. We don't want to try and buy into panic selling because every bounce will be very short-lived and it could continue to fall. So in a downtrend, we see panic selling over and over again. It's the FOMO that gives us some insight where to short or to take partial profits or just to know that it's about to roll over. More so when we're in a short-term uptrend, we tend to have more so FOMO more frequently as people keep piling in, climbing that wall of worry, and they don't want to miss out on the move. So that's kind of where we are. Short-term FOMO, little pause and gap down this morning. Likely going to see the market get bought back up. But overall, it has had a nice run, and a pause or pullback likely to kind of take place here before it wants to maybe take another run and go higher. Hey, and a quick reminder, if you're watching this right now, about 40% of you watching these videos aren't subscribed. So make sure you just go click that subscribe button, click the bell so you get notified when we do post something. And let me know in the comments what you want me to cover, and I'll try to do that. Anyways, be sure to share these videos if you find them educational. That's the same for the NASDAQ and all the other indices. If we take a look at the chart of bonds this morning, we have bonds pulling back. Money's kind of been flowing into stocks the past few sessions and out of bonds. Very typical, like historically, that's kind of what we're used to seeing. One or the other is going up. They're kind of opposite to each other. Today we are seeing a pretty big move in gold. We got gold up 2.6% this morning. We talked about this little three-wave correction to the downside. It's finding some traction. It did dip. It is in a strong uptrend. It dipped into an oversold territory last Thursday. And of course, we're starting to see this pop and run. We'll see if it's going to extend and take another run higher. If we take a look over at silver, silver's up 1%. Again, I'm not a huge fan of the silver chart. It is starting to build out a nice, what looks to be kind of a launch pad here. It does have a strong run, has a bull flag. It's finding support on a cluster of moving averages. So this could end up having a nice run and want to push to some nominal new highs, not new highs, but highs above this high or potentially these highs over here. So it might have that push. Percentage-wise, it could be pretty good. You can see here it is in a oversold territory the past 2.5 trading sessions. And it is building a little bit of a launch pad here to take a run higher. So if we see gold and silver move up, obviously miners should also participate. So the precious metal space is still acting as that defensive play. It's holding strong bullish chart pattern. And gold is kind of leading the way, definitely as the even bigger percentage-wise moves than silver, which is clearly telling us that gold is the defensive play, not so much silver. The fact that it's 2.5 times the volatility of silver is pretty wild. And that's a bullish sign for the gold and more so gold miner space. I shared this last week, this chart here. This was the big sell-off. I overlaid the Google search trends for inverse exchange traded funds over the same time frame, and it's pretty interesting. In fact, if I pull up this chart here, so February and March, we had everyone piling into the leveraged long ETFs. And I was telling everybody, I'm like, this is right back in here, right in this area. I was like, don't be trying to pick a bottom. It could backfire huge. Everyone was trying to pick a bottom, and then the market collapsed huge in a big way. And of course, we had this gap down. We talked about this the day of this, where the market closed on a Friday at this red bar at the lowest point, and how that was going to carry fear over the weekend. And we're going to see the market open sharply lower. And over the weekend, everyone saw the selling pricing and they freaked out and created a huge gap lower. And then the market rallied up through the day and kind of put in that short-term bottom. And of course, everybody goes from buying all the leveraged ETFs to, in one day, one big move down, they all decide to go to the leveraged inverse ETFs. And they all bail out at the peak. This was, very signature bottom. So taking things like a step further, take a look at this chart. So this top chart is the monthly chart of the SP 500, SPY, and the bottom chart is the same. So the top one here is back in 2006, 2007. This was the first initial big crack to the downside, and we had a huge search spike on Google Trends for people saying, oh my gosh, we're in a bear market. And it was huge, and we've just had the same thing here. We had the big breakdown. We had a big spike in everyone searching bear market. And everybody keeps saying, it's the biggest sentiment, that we have. Everybody's expecting a bear market. And yes, I do agree. Everybody's worried about it and stuff. But just because, for example, think of the ocean tide going down. When we know high tide is in and the tide's going down, just because we know it's going down doesn't mean it's going to stop and it's going to go higher. It's a cycle. It's something huge that is a multi-year. It is a global cycle that goes through, and the process has started. So just because we know we have one big bout of fear, just like we did back in 2008, there's going to be multiple fears where people have down selling pricing, and there's more spikes and more people saying, oh my gosh, we're in a bear market. We're in a bear market. Just because we know we're in a bear market doesn't mean it's over. It actually just means we've hit the tipping point, and now people realize it. And a lot of people who look at sentiment on too short of a time frame are saying, well, everybody's already bearish and they already know we're in a bear market. We're not going any lower. But I'll argue that typically we see some multi-month bounce, which is where we had this big flush down candle here, big rally back up. And I think we could go over a few months, just like over here. You see the markets go over several months, and it is a tradable type of bounce potentially. And then you see the market go into the waterfall sell-off, and the market sold off about 57% on the SP 500. So that's kind of what I see unfolding. So don't get too caught up in all these sentiment charts people post saying everyone's bearish. I believe almost everyone's bearish too. I mean, when you look at the searches, and most people, they're worried. But there's still a ton of people picking a bottom, and just because they search it doesn't mean they're actually taking action with their portfolio. They're just looking into it and all of that stuff. But anyway, I thought that was really interesting that the tide has changed, and you need to realize just because people feel bearish, or a good group of people, doesn't mean the bottom is in. It actually means it's the start of something, and there's going to be multiple of these waves of panic as the market sells off. These spikes are people searching bear markets and what to do in a bear market, and how long will it last, and how do I manage it, and all of that stuff. Anyway, other than that, I think that is it. We'll just see how the market unfolds. It is set to open lower this morning after yesterday, or not yesterday's, but last week's kind of pop and squeeze higher up into a short-term resistance area. Anyways, that's it for now. Talk to you soon. Bye-bye.